So tick count trend 2 is one of my favorite trading systems. It's a counter trend strategy and it's currently in a drawdown, and I'm currently updating this strategy. I've made some minor changes. I haven't optimized it. I just saw some areas where it could be improved. And so here's the TradeStation update. I'll be implementing or updating the code for NinjaTrader, and then I'll be sending the updates out. And this is one of the best strategies that I have, and it's a counter trend strategy. It's a little bit of a drawdown. So this question comes up: should you trade a strategy that is in a drawdown or in a run up? So a lot of traders might want to say get excited about a strategy that's in a run up and buy the equity peaks. It's easy to do that and to buy the strategies with the best performance. But one of the things that I do when I develop portfolios is to, one, pick trend and counter trend strategies, different time frames: 1 minute, 5 minute, 15 minute. You want different methodologies, and when you have different methodologies to cover different types of market conditions. And number 2, I want to pick strategies that are in a run up, and I want to pick strategies that are in a drawdown. I don't want to pick 10 strategies that are trend strategies all in a run up, and then the market goes into counter trend mode, and these all of them lose, and you get a run and you get a big drawdown. And so I want trend and counter trend strategies. And you can see in this portfolio, or this strategy in particular, the 1 minute and the 5 minute version are in the portfolios, and this is in a drawdown. So you see there's areas where this strategy draws down, and those are good, can be good entry points as long as these are minor drawdowns. There can be times when a strategy underperforms or no longer performs and has to be modified. This strategy was modified because I saw some updates. I would still go with the original setup, but I saw these minor updates that could help the strategy and also are more consistent across different platforms and data. And so I wanted to make these updates. And the average trade profit, which we always look at, is a key factor. 53.76. This is the 1 minute version. 53.76. The 5 minute version has $57 average trade profit, $3,500 drawdown. That's low. This is without slippage and commission. So when you add slippage and commission, this drawdown is going to be a little higher. This number is going to be lower by about $25 to $30. And the equity curve is going to be choppier. So we look at all the strategies without slippage and commission, and we look at them with slippage and commission, and the portfolio calculations are with slippage and commission. So 1.56 profit factor, that's a good number for a day trade strategy. I know that I've talked to many. There's a lot of people right now that are looking for 3.0 profit factors, and I've never seen a strategy that has a long back test that's not optimized that has a 3.0 profit factor. So if you find that, let me know. It might be a strategy that's trades very infrequently, but just rarely ever see a strategy that has a long back test. I've actually never seen one that has a 3.0 profit factor that isn't optimized. So that is something to also consider. You can have a low profit factor, even 1.1, if you trade frequently, and you don't have to have a high profit factor. So many high frequency trading firms would get away with a 1.01 profit factor. So that just depends on how frequently you trade, what your average trade profit is as well, and how long you hold the position too. So those are all key factors. But I like the statistics on this. These are in the portfolios, and this is tick count trend 2, and it is a counter trend strategy. Let's see, what else can I show you? This is the 1 minute version. Let's look at the 5 minute version. A little bit higher average trade profit, $57, and it's in a 28.75 max drawdown. You see that there? It kind of went through a similar drawdown back in this time frame right there. It goes through periods where it has drawdowns right there, and then when you get the key is to time this so you become part of these nice equity runs. So you get these drawdowns, and then you get the equity runs, and so you want to time this. And if the strategy for some reason stops performing as well as it did in the past, your risk to worst case drawdown is really low, and so it gives you a good entry point into a strategy when it's in a drawdown. And so That's some of the philosophy that I use. Again, I don't want to trade strategies that are all in drawdowns in a portfolio, and I don't want to trade strategies that are all in a run-up. And so I try to mix them up, strategies that are in trend and counter trend mode, and run up and drawdown. And tick count trend 2 is something that we're going to be kicking off, and part of the portfolio setups for October. And if you have those, you'll be getting those updates soon.